Alright, welcome to this presentation on Orderflows.com, how to use Orderflow to find market-generated support and resistance levels in real time. My name is Michael Baltos. I'm the founder of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So, what I'm going to talk about today is finding support and resistance levels in the market using market-generated information. Now, why is that important? Well, you want to know why a market is not going to fall, or is not going to rise any further. I show this picture of a bridge, right? The bridge is being supported underneath by, the big concrete, these areas down in here to support the bridge. I don't have a picture of a resistance, but, this is what's supporting the bridge from falling. Okay, so let's just jump right in. So this is a bond, 5-minute chart. This is from the other day, last week, I believe, or actually, yeah, last week, April 19th. And, okay, the market is going, it's trading between 165.12, 165.06, and we start to sell off in this bar. Now, this is a 5-minute chart. So this bar here is your first sign that we're starting to sell off. Now that now that you have this feeling that we're starting to sell off, in this next bar, what's telling, how can you determine, where, the market's going to come back up to, and you're going to see a resistance level? Well, that's where, the market imbalances come into play. So you can see, right? You turn on the imbalance clusters, the stacked imbalances, and you can see you have 1, 2, 3 here. Here you got some more. In this bar open, this bar here at 9:10 open, we traded right into the middle of the zone and then sold off. And then you get another stacked imbalance. This time it's quite strong. It's 1, 2, 3, 4, 5, 6 levels, and you can see that over the next, how many bars you got? 1, 2, 3, 4. It's acting as a resistance level. We can't go back up and get inside this area, and we just sell off some more. Okay, and then we come down into this low. This red line is the low of the day. Now you got a stacked buying imbalance. Okay, well, we haven't moved away yet. We haven't started to rally, and we're still trading inside that area. Okay, it's right off the low. The low is here at 164.13. Your imbalance starts at 16 up to 18. We get through it by 2 ticks. Okay, it's not the end of the world. It's a support and resistance level. Sometimes it does probe on the other side. It's not like it completely fell over and started making new lows. But the fact is, we're hanging around in there. It's still hanging around the support level. What happens? Okay, and then market, okay, we're right here. 10:15. We start to trade out of it, to the upside. You're trading 20. And then, we just start rallying 21, 22, 23, 24. You get another stacked buying imbalance here. Okay, well, this is going already off the chart. Again, it's acting as support. You can see it. The market, it came down within a few ticks, 2 ticks of this level, and now it just keeps going back up. And I think that was it for the day. Let's go forward to the next day. Let's see if there's any more examples. Okay, so here's one. Now, this is different, okay, because it's a stacked imbalance and it's near the high. If you're seeing a stacked imbalance, you got to take everything in context to what's going on in the market, right? If you're looking for a support level, you want to find it near a low. If you're looking for a resistance level, you want to find it near a high. You can make an argument that it shouldn't matter if you're dealing with imbalances, and some people will try and make that argument. But for me, you got to take everything in context. Just because there's a stacked buying imbalance doesn't automatically mean that it's going to be a support level. Yes, you're at the high. It can become a support level up near the high, but I prefer to look at stack buying imbalances when we're closer to the low or in the bottom half of the day, and stack selling imbalances as resistance if we're up near the high. But nevertheless, you can only trade what the market's giving you, and here's an imbalance right on the high. What it's telling me is there's some aggressive buyers. As you come into a high, what you want to see is you want to see aggressive buying come in, and you're seeing it here. Okay, yeah, it sort of goes sideways on you over the next 10 minutes. I read that a little bit differently as opposed to support and resistance. When it's a buying imbalance near a high, I'm more interested in seeing, if the aggressive buying is coming in to take out the highs, or if we're just going to go sideways. And same with near lows with stacked selling imbalances. Okay, so here we're up here near the high, and we get a stacked selling imbalance. And what's happening, this next bar opens, we trade inside of it, we get through it by a tick, and then we start to come off. It's acting as resistance. If you're just looking at a chart like this, you're wondering, okay, well, where's this next bar going to pull back to? Well, if you have the, some way to indicate on your chart clearly where these levels are, it makes trading a lot easier. And so, we came back up in here in this bar, and we traded inside here before selling off. I don't know if there's any more this day. I just took a couple of days at random. Again, this is a 5-minute bond chart. That was a nice short if you got short. I don't know if there's any more. Okay, well, here's one again. It's now this time again, it's like that buying imbalance near the high. You have a selling imbalance near the low. If you're seeing a selling imbalance near the low, I'm inclined to take it as that hey, that's what you want to see at a low, and look to possibly jump in on the move. Again, it should act as resistance, but I sort of view it a little bit differently. I'm more wanting to participate because when you're coming into a low or a high, what you want to see is aggressive buying. You want to see people buying the offer on the way up. You want to see people selling strongly into the bid on the way down. And that's it for that day. Let me see if there's more data here going forward. I'm really only interested in it during the day session. I mean, that's when you're going to get the most volume, and charts will make more sense. Again, okay, so this is the 21st, right? Just going forward a few days, the next day. It's not like I'm just cherry picking things. I'm scrolling forward on the chart, so you see this. This is every day. These are happening. It's not like I'm picking one instance where it works and not showing you the other instances where it's not working. I'm just going through my charts and explaining it to you. So here you go. So this is again, this is the 21st. In the bonds, your low is here, this red line, and you're coming off your low. You get some aggressive buying. You got a stack buying imbalance, and it's holding, right? I mean, look at it. We're above it. We're above it. Come back into it. Down in here. Now this is interesting because you're still sort of above the zone. All of a sudden you get a stacked selling imbalance shortly thereafter. It's kind of conflicting in the sense that, okay, you got some aggressive buying, all of a sudden now you got some aggressive selling. This aggressive buying looks a little bit stronger than this aggressive selling. You could make the argument, maybe these things cancel out. But, had you been long in here somewhere, you see in this aggressive selling, you should be looking to get out, somewhere either in this bar or this bar. It's up to you if you want to get short. Usually I don't like to go from long to short thereafter. And what happens, it just sort of goes sideways on you because, what I find is when you sort of get, one signal and then another signal shortly thereafter in the opposite direction. Again, this is a 5-minute chart, so you're only talking 5, 10, 15 minutes, 20 minutes. It's more inclined of a market it's more of a sign that the market is kind of, I'll say, indecisive. But you have one signal going one direction, then boom, immediately thereafter, while you're still in it, you get a signal going in the opposite direction. I just find they sort of cancel each other out and make everything neutral, and the market has a tendency to go sideways. I mean, that's my own personal observation. Okay, so a little bit later on, just before 11, you get another stack selling imbalance. Yeah, is it acting as resistance? Yeah, you could say that. I mean, look, we're still holding that level. It's not like we're rallying up through it, or we're spending a little bit more time on the downside. You do have a ratio here, which is kind of a bullish signal. At best, it's acting as a level, and it's kind of holding. You're poking through it a little bit. Not on the again, you're not setting off a big rally up here, but it's a level, right? And a level is not going to be one particular price that you expect it to hold, or if it breaks through it, it fails. You got to think support and resistance levels, not support and resistance prices. And so this is at the area around 162.16. We're just sort of going sideways. I'm not going to say this would have been a great short, because you do have a buy signal here. At best, you could get out with a small loss or a scratch, or maybe depending on how you're trading it, you could squeeze a little bit something out of it. But that one I don't think really gave you much to squeeze. Okay, well, I think I got one more day here for the week. So this is Friday, then the 22nd of April, 2016. Okay, you got a stacked balance here. It's holding. It's holding. It's just going sideways on you. Okay. It's one of those things. What's the market doing? Is it going sideways? Is it going up? If the market's going sideways on you, you don't sit there and think, oh, I'm going to wait until it goes in my favor. Get out. I tend to find that as the longer it goes sideways, the longer you're exposed to risk. Even though, okay, look. So you have this imbalance, right? It happens between the prices 16 and 18, which was the previous one from the day before, which was quite interesting. But 16 to 18. Okay, so it comes down through it, gets down to 14, still hanging around the 16, 18. Later it pops up to 24. But that's this is what time? That's 10:20. To 11:35. Are you going to hold it for an hour? I don't know. Me, no. On a 5-minute chart to hold it for an hour is a bit of a stretch, but on a slow day you might want to consider it. I mean, it's up to you on how you trade. Me, I'd just be, once I get sort of outside the zone, the software you can choose on how many bars out you want the zone to go. You just go under the indicator setting. It's not going to open up for me, but okay, hang on here. It's a little bit slow today. If you go under the indicator setting, you can go in here, imbalance cluster box size. It's set at 5. So it'll draw it out the next 5 price bars, 1, 2, 3, 4, 5. I tend to use 5 because I find, if a trade hasn't worked out for me within 5 bars, I don't want to be in it anymore. Now, in cluster size is 3. So if you want it to appear only at 2, when there's 2 imbalances stacked on each other, you change it to 2. Don't worry about the width. Right, so the main ones are 5. This one in cluster box size and cluster size. Or say you want it to appear when there's a stacked imbalance of 4 or more. Then you change it to 4. It would limit it a lot. But those are the settings that come with the software. That I think are quite reasonable. Again, later in the day you got a stack selling imbalance here, and it's holding, right? Again, if you're not if you're not using these, you're just looking at this thinking, okay, well, is this market coming off? But if you're using it, you could think, hey, maybe I could get short on a pullback up here. If you know where these zones are, where the market's going to have a tendency to pull back up into and come off. So, if you're scalping, you could get short here at 16, and, you could get a few ticks out of it, in a fairly quick time. So, I mean, this one, 16, went all the way down to 12. Again, I'm not saying I'd be holding it way out into here, but, now it's just going sideways. This is Friday already after 2 o'clock. All right, so thanks for watching this video. If you want to know more about the software that I'm using in this video and in my trading, you visit www.orderflows.com. You can see a lot more explanation on things. Or subscribe to my video channel. on YouTube, and you'll see a lot of other videos on a lot of other order flow topics. So thanks for watching this, and hope to hear from you. Bye-bye.